Welcome to the Making Flood Insurable for Canadian Homeowners conference call. My name is Paulette, and I will be your operator for today's call. At this time, all participants are in a listen-only mode. Please note that this conference is being recorded. I will now turn the call over to Jens Mailhorn, Head of Flood Group at Swiss Re, and Paul Kovacs, Executive Director, Institute for Catastrophic Loss Reduction. Please go ahead.
Good morning, this is Jens Mailhorn speaking. Good morning to everybody here from Switzerland. In November 2010, the ICLR and Swiss Re have jointly published the study Making Flood Insurable for Canadian Homeowners. And we saw this study as a discussion paper with which we wanted to launch actually the discussion of the insurability of flood for Canadian homeowners and small enterprises in Canada. Actually, the study that we have launched is free download, available at Swiss Re internet pages and the same on the ICLR internet pages, and there are also a couple of hard copies available which we could send out. So the study actually was published 15 months ago, more or less time, and since this time things have happened from a global basis but also in Canada. So from our point of view, we thought it's now a good point in time to go back to the Canadian insurance community and first talk about what were the key points of our study Making Flood Insurable for Canadian homeowners, but also to inform you what were the new developments on a global level in respect of flood insurance, but also what has happened in Canada in the last 15 months. And these topics will be covered in this call, and we will finish with some conclusions and with a Q&A. And please be aware that you can send us in your questions during the call via the conference system, and we will then pick up these questions and discuss them at the end of the call. So I will start with a quick summary and the main findings of the study that we have published, Making Flood Insurable for Canadian Homeowners. So the first main key finding of the study was that Canada is one of the only countries in the world where you cannot buy flood insurance for homeowners or for small commercial businesses. And this despite the fact that Canada is a country which is prone to all types of flooding. And the main conclusion of our study was that flood insurance is indeed feasible in Canada, and it can be introduced. And with the next slides, I would like to show you how flood can be made insurable. In general, from our point of view, floods are an insurable peril. Probably there are different perspectives on that, but from our point of view, flood is really an insurable peril. And there are three key insurance principles that have to be met to make flood an insurable peril. So the first one is we have to create a large risk community, and this can be created. There are ways how we can create such a large risk community, and as you know, flood might be a problem to create these risk communities because we have the problem of anti-selection. But there are ways how we can overcome the problem of this anti-selection or adverse selection. Then also, what is very important, the risk must be accessible. And also on the technology side as on the data side, there's now everything available that we can accurately assess the flood risk. And then last but not least, an insurance scheme has to be economically viable. And this can also be guaranteed. And one main point or one important point to guarantee the economic viability is that now technical measures are available to accurately assess the flood risk. So There are no technical obstacles to provide comprehensive flood cover in a country, but this is always under the condition that all the stakeholders that are involved assume their responsibilities. And with the next slide, I would like to lay out how a model for Canada could look like. And flood insurance is always a partnership. It's always a partnership between the different stakeholders that are involved. Probably you all have heard about the public-private partnership, and flooding is a very good example how a public-private partnership can work. So on one side we have the homeowners. Homeowners should buy flood insurance, should get access to flood insurance cover. But on the other side also homeowners should take preventive actions to minimize losses during a flood event. And this can be best assured if homeowners or small commercial entities participate also in the losses via a significant or a meaningful self-retention or deductible. So if there's a deductible in place, then people are more forced to reduce losses during events because they participate in the loss. On the other side also, the insurance industry has to assume their responsibilities. The insurance industry has to offer flood insurance on a wide basis or on a widely basis and on an affordable basis. And this should be, everybody should have access to that, with the exception that the insurance industry or the insurance companies could exclude flood cover for those risks which are extremely exposed. And this could work in different ways. There could be an exclusion straight away for highly exposed risks, but it could be also put in place that, and this is a very important point, that the insurance industry charges risk premiums or premiums which are commensurate with the risk. And then those risks which are extremely exposed would get an extreme high price tag for flood insurance, which would make it probably not affordable anymore, and then these extreme high risks would move out of the cover. And then last but not least, the government would need to assume also quite some responsibility. First of all, the government would be in charge to raise the awareness of the flood risk. So people need to know where are the high exposed areas and what is the exposure in terms of flood risk. This is best implemented by a detailed flood risk mapping. So the entire country, or at least the densely populated areas in the country, would need to be mapped according to the flood risk. And then this information about the flood risk should also float into urban and regional planning, meaning that settlements would only be allowed in high-risk areas if there are maybe specific construction codes for these areas, or on the other side, if the government can guarantee that it sufficiently invests into flood control work so that the high exposure is minimized. And then last but not least, the government should also allow insurance companies to build up large loss reserves and do not or should not do there some specific tax deductions. Now, actually, as this has been laid out, this would look like the perfect system and might be difficult to implement. Around the globe, there are already quite some flood insurance systems implemented, and all of them are imperfect, I would say. But although they are imperfect, the Canadian insurance industry could learn from the experience that has been made around the globe. And now, if we want to differentiate the different systems that are available in the world, a quite simple way would be to align them along these two axes. So one axis would be privately organized or a public solution, and the other axis would be whether it's a compulsory solution or an optional solution. Under the compulsory solutions, we could see also those solutions where the flood risk is automatically bundled to the fire coverage. Now, if we populate this matrix with systems around the globe, I don't put all of them, but just some examples, then you see here on the left side, for example, on the privately organized systems, we have the UK, we have Australia, we have Germany as examples. And there we can then also differentiate about whether it's a compulsory bundled system or whether it's optional. Germany is a system which is characterized by an optional flood cover, so it's not compulsory. People can choose whether they want to buy flood cover or not. On the other side, in UK, it's also a privately organized system, but there actually people cannot really choose whether they want to buy flood insurance or not. It is automatically bundled to the fire coverage. So everybody who buys fire protection in the UK would get automatically not only flood cover, but all natural catastrophes covered. Then on the other side, on the top side, we have those systems which are compulsory. And there we have Switzerland, which is probably a specific case. There we have a compulsory cover, but it's organized in some cantons on a private basis, and in other cantons it's organized on a public basis. The same we have, or not the same, but on the public organized system we have in France and Spain. Actually, France and Spain, these systems do not differentiate too much from each other. But probably the example of Switzerland is also quite interesting because it demonstrates that within one country you might have different systems. And this might be also the final way that Canada would go, that for each province or for some provinces you might introduce a different system than in another province. And then last but not least, there's the US with the National Flood Insurance Program. This is an optional program that is publicly organized. Now, another differentiator between the systems is that we have these compulsory state systems, and most of these compulsory state systems are regulated by the state, and there's a tariff, and it's a flat premium. So everybody pays the same premium irrespective of the flood risk. And then we have the privately organized systems, and there we have the free market playing. And typically in these free market solutions we have also a risk-adjusted premium. So people pay according to their flood risk. In some cases there might be a bit of cross-subsidy from the low exposed to the high exposed, but there are risk premiums which are differentiated by the risk. So finally, all of these systems which I highlighted here on the left side and also on the top right side would potentially work. They have all their imperfections, but actually they work quite well. What does not work so well is the US National Flood Insurance Program. There are so many things that do not work well or that go wrong that I think it would not be advisable that Canada takes over the National Flood Insurance Program from the US. And this is something that we would never advocate for. So at the end, probably it could be one of those systems on the left side or on the top side. We have our preference for the UK system, which still has also some imperfections. On the other side, it might be very difficult to take one system that works well in one country and just copy it and transfer it to another country. So there might be always, or there will always be some minor amendments needed to cope with the specific requirements in one country. Now, I would like to go on with the new developments in flood insurance from a global perspective, and all what we have seen there in the last 15 months is that losses, or large losses, continue. They are getting larger and larger. But what we also see on a global level, that we have a clear trend for more flood insurance. In most of the markets, we see that more flood insurance is bought, and there's also more flood insurance offered in more and more markets. And what we also see in the UK, a market which is offering flood insurance on a very broad level already over decades, there are now new discussions going on which want to improve the system further, but there's absolutely no discussion about not offering flood insurance in the UK anymore. So overall, the trend is quite clear for more losses, but also for more flood insurance. And I would like to go a bit more in detail. What you see here, this is the development of insured flood losses from 1970 to 2011, and 2011 was the highest. We experienced highest flood losses, insured flood losses, which were almost or more than double of what we have experienced so far. And this clearly shows the trend, the strong upward trend of insured flood losses. This is all on a global basis. So in 2011, we had more than 15 billion of insured flood losses around the globe. And there are several reasons why we see more and more flood losses. One reason for sure is that people are getting wealthier, and buy more insurance. What we also see is that there are more settlements into flood-prone areas like floodplains or into coastal areas. Then also what we see is that the vulnerability of the insured values are getting higher. So some 15, 20 years ago, probably many people had just a normal cellar, a normal basement, and nothing in the basement. But now most of the basements you have high-tech equipment, and if these are flooded, then losses are becoming higher. And then last but not least, we have also climate change playing a role here. How much climate change is impacting is still difficult to quantify, but what is a fact is that climate change is going on and will increase flood losses in future even further. Now a bit more detail on new developments. There are some developments, for example, in Germany. Just to recall, in Germany, flood cover is provided on an optional basis. In Germany, also, there is a flood risk system available. This risk zoning system, was jointly developed by the insurance industry, and all players in the German market use this flood risk zoning system. Everybody is allowed to charge premiums as they want to, but the system is used quite widely. In the last year in Germany, many players have started advertisement campaigns, sending letters out to their clients and informing them about their flood risk. And the success rate of the German insurance players was quite high, so the response from the insured was very high, and they could issue a lot of new flood coverages. So Germany would be a very good example where the insurance industry has chosen a proactive way to increase flood insurance, and the main driver in Germany was that they worry that the government could superimpose something that the insurance industry would not like. So they have proactively started to increase flood insurance penetration. Similarly, in Australia, there flood was insured or was actually not insured. There was some insurance cover for flash flooding, but river floods were not insured. And this is probably, from a consumer point of view, a not perfect solution, because most consumers cannot really differentiate between a flash flood and a river flood. And then in December 2010 and January 2011, we had widespread flooding in Queensland, causing huge losses, and many homeowners were left alone because most of the losses were river flood losses and not flash flood losses. So this has then put some pressure from the government on the insurance industry, and there then also the insurance industry has proactively started to increase flood insurance, and now more and more regions or more and more insurers provide river flood cover in Australia. Very important is that insurance companies provide only river flood cover in those areas where a detailed flood risk mapping is available, meaning also where they know how much premium they have to charge. So also Australia, I would say, is a good case where a proactively approach has been chosen, just to be in the driving seat from the insurance point of view, and don't wait until any superimposement comes from the government. And then, last but not least, United Kingdom, where we have the Statement of Principles. The Statement of Principles is agreement between the government and the insurance industry, and the agreement says that the insurance industry will go on providing flood insurance on a wide basis and at an affordable level to homeowners, and the state agreed to do some substantial improvements of the protection system in the United Kingdom. This Statement of Principle comes to an end in 2013, and now already last year a lot of discussion groups and working groups have started, mainly organized by the ABI, the Association of British Insurers, and all of these discussions want to go on with a widely and affordable flood insurance in UK beyond 2013. So there's a clear commitment from the insurance industry to provide flood coverage in UK beyond 2013. And now there are intensive discussions going on, and most discussions circulate around the creation of a pool for high-risk locations. So here again, I would say the insurance industry was proactively approaching the problem of flood insurance in its country, and what is quite clear in UK, they want to keep flood insurance, and they want to keep it affordable to all homeowners in that country. So that was the global perspective, but in the meantime, since we have launched the study, a lot of things have gone on also in Canada, and with that I would like to hand over to Paul Kovac, outlining the experiences in the last 15 months in Canada.
Thank you, Jens. It's great to talk with everybody today. As Jens laid out, Swiss Re and ICLR set out to have a dialogue in Canada about making flood insurable for homeowners, and that began a little over a year ago when we released our joint research paper. And we're very excited to be participating today in this discussion. I see there's more than 300 people on the line with us today, so we're thrilled that the interest is strong to have a discussion about the potential of flood insurance for homeowners. And I'm going to give you an update on some recent developments here in Canada, just as Jens has so helpfully quickly overviewed some of the developments that have happened around the world in the past year and a bit on this file. One of the parts that came out very recently was that as we were releasing our paper, that was a year of very significant flooding in Western Canada, and just recently there has been an effort by the Government of Canada and the provinces to put a value on that, and this was $1 billion in flood losses happened in Western Canada in 2010. Again, one of the more significant flood events in this current generation for Canadians. So flooding is not just an issue that occurred many years ago. This is something that's happening right now here in Canada, just as we've been watching on television, and Jens was summarizing in many other countries around the world. Flood remains the most common or most frequent catastrophic risk in this country of Canada and in many other countries around the world. So as we were releasing our report, we were just coming off a $1 billion flood event in Western Canada. In last year, there were two very significant flood events. In the West, again, we had very, very large evacuations and other disruption happening in Manitoba, with several rivers being hit by spring flooding. Again, very, very significant flood risk occurring in the western part of Canada last year. And later on last year, the flooding moved over to Quebec, and thousands of homes flooded and many, many people disrupted, causing a very, very important dialogue happening in yet another part of the country about flood risk here in Canada. And in essence, almost all of the major centers have had some sort of flooding risk in the relatively recent history here in Canada. Part of the public response to the event in Quebec was the Prime Minister did tour some of the losses, and he chose to speak a few weeks after the Quebec flooding, which was still continuing at that time. And the Prime Minister stated that the Government of Canada would provide financial assistance to Quebec, as it has done for the western provinces and others that have experienced flooding damage. And at that time talked about the effort going on where the federal and provincial governments are talking about reviewing natural disaster response and funding at a national level. And so there's a very active dialogue that the Prime Minister publicly spoke about that has been going on in terms of federal-provincial discussions about disaster response and funding. And just earlier this month, there was an announcement in British Columbia that the Government of Canada and the Government of British Columbia was going to be making some very significant new investments in flood defense in British Columbia. So we've yet to see a full national statement about what the new disaster response approach will be in this country, but it is public that there is a dialogue going on. And part of the dialogue that the Prime Minister spoke about, here the quote, the direct quote from the newspaper, where he talked about raising homes in floodplains and burying electric cables and updating zonings and building codes and mapping. But the Prime Minister specifically said that the federal and provincial governments would look at insurance programs for natural disasters, including flooding. So there is a federal-provincial dialogue underway in this country, and as Jens briefly went around the world with some developments that are occurring in several different jurisdictions, I would encourage anybody who's not aware of the Australian discussion. In my opinion, it's quite relevant for the Canadian dialogue. Some of the issues that came up and are still being discussed in Australia are very similar to the issues that we think are important for Canada. And there's a report that you can find if you Google the Natural Disaster Insurance Review. There's a report by the Natural Disaster Insurance Review for Australia that looks at many of the issues that are relevant for Canada and shows how the Australians are choosing to talk about insurance in the context of managing a series of different hazards. So the quick update on Canada since we released our report is that there have been a number of important flooding events in several parts of the country. There is a federal-provincial dialogue underway about issues related to flooding and natural disasters generally. The Prime Minister has said that dialogue includes a discussion about insurance. but there's a host of other things that are part of the discussion and are probably a bigger part of the discussion that is already going on in this country. And I'm not aware that there's a specific date about when that dialogue will become even more public in terms of decisions and what's going forward. But there is a dialogue that the Prime Minister has talked about in this country. So that was my quick update on some of what has occurred in this country since the last report, since we released our report a little over a year ago. And I would like to encourage anybody who isn't familiar with the report that we put out, where Dan Sandick was our primary researcher leading on this, that Dan and the team looked very, very carefully at what is happening province by province in Canada, as well as Jens' quick summary of the different models that are occurring around the world. And in particular, we focused on the 4 provinces with the largest populations of Ontario, Quebec, BC, and Alberta, and tried to provide very detailed information in the report about the different programs that each of the provinces have in place, the state of flood maps, and other issues relevant to the discussion. And when we were done, the joint conclusions that Jens will summarize are conclusions that Swiss Re and ICLR developed together in terms of, in particular, our belief that flood, in technical terms, flood is insurable here in Canada. But Jens, with that overview of Canada, if I can turn it back to you to take us through the conclusions of the webinar.
Yeah, thank you very much, Paul. So the conclusions for this call would be, there are still large loss events going on inside and outside of Canada, which demonstrate that there is a large demand for flood insurance in Canada, but also on a global level. From all countries that we see, there's a clear trend for more flood insurance. So all the countries in the world, they offer more and more flood insurance, so they fulfill the demand of homeowners. What we also see that most of the countries go a proactive approach. They do not wait until there is a superimposement from the government. So most of the insurance companies or of the insurance associations in the different countries, they want to be in the driving seat, which would help, or which is very helpful to steer how flood insurance should look like. In Canada, there has been started a discussion about flood insurance, but from what we observe, most of the players are still very cautious. But on the other side, we would say flood is insurable also in Canada. And from our point of view, there is no technical obstacle, or there is no obstacle that cannot be overcome to make flood insurable also in Canada. At the end, probably it's more a will. Can we implement that? And again, probably it would be better if the insurance industry in a proactive way is in the driving seat and can steer the way how flood should be insured in Canada before probably the government decides, and then we would get maybe an imperfect system. And with that, actually, we are at the end of our presentation. But what I've seen, and I would like to thank everybody for the very active participation in this call, and I've seen that there are a lot of questions coming in over the system, and we still have quite some time to pick up these questions and answer them. I would start with one question that came in and maybe goes already in a bit into detail, but I think it's an interesting question. It is, how appropriate would be the French model for Canada? And maybe there I first have to explain again a bit more how the French system looks like. The French system is a governmental scheme, and it has a flat premium. So every insured in France pays the same flood insurance premium, and everybody has the same condition. And it's a state backup scheme. It could work in Canada, but from our point of view, it's not really a perfect system. Probably what could be improved there is that people should pay commensurate to the risk. So people who live in high-risk areas should pay a higher risk premium, and those which live in low-exposed areas should pay less premium. And then the second imperfection must not be an imperfection, but it could cause problems. It is a state-regulated flat premium. So in case of larger events, what could happen that premiums are not high enough to cope with the losses. Then an increase of premium is always very difficult because you need the politicians, and they would need to increase the premiums, and that would always be seen as a tax increase. So the increase of premiums is always very difficult if there is some interference with the politics. So these are some problematic areas of the French system. It does not mean that this would not work in Canada, but probably other systems would be much easier to implement, but it would be an option.
Jens, it's Paul. There's another question here, if you don't mind me sharing a question and offering an answer here. One of the people participating asked the question, do you believe the Canadian government might govern flood insurance if the industry doesn't self-govern? If I can offer my view on that, Jens shared a very quick summary of the many different programs that are being used to provide flood insurance around the world. By almost every measure, the least successful program is the one in the United States. And over the last 20 years, I've often had Canadian politicians ask me if Canada should have an American flood insurance program, where the government clearly in the United States is governing how flood insurance is being done, and they're doing a very bad job of it. There's no program quite as terrible as that in place around the world, in our opinion. And that is a model that I quite aggressively share with those who ask me why Canada should not borrow this American idea, even if in some other cases we borrowed American ideas and they were good. The American flood insurance program is not a good idea at all. But if you look at the other programs, the many other programs around the world, it is common in almost all of those programs that if the industry puts forward a very strong, clearly led initiative where we are those most capable of identifying risk, measuring risk, pricing risk, managing risk, that the government typically very much welcomes having the insurance industry provide that kind of coverage for fire risk, for theft risk, for so many other perils. And the amount of regulation on the property insurance side in Canada is very light, and perhaps with the exception of the United States, there is not a lot of government interference in the business of doing insurance. And so our report primarily focused on how our industry should interact with governments so that governments helped us do flood insurance, if we choose to do that, by doing the job of government. And we believe the job of government is to keep people out of the floodplain and to provide good flood maps and to talk to the public about flood risk and do public education. If the government does the government's job on flooding, then our ability to do our job of measuring and providing insurance coverage at a risk-adjusted pricing, that's what we do, and that's what we have been allowed to do for fire and theft and many, many other perils. So there's always uncertainty here, but it's our belief that the international experience and the Canadian experience with other perils suggests that the government would welcome if our industry chose to provide flood insurance and would not choose to interfere on the insurance side of things, and hopefully would get even more involved on doing the government part. So I hope that's an answer for our view on that question.
Yeah, there's another very interesting question that came in. It reads like, in the presentation it was mentioned that homeowners would participate in losses via significant retention. What do you mean by significant? I think significant, maybe it's better if we say a meaningful deductible or self-retention. And by meaningful also we mean that it should be deductible in % of the sum insured. So it shouldn't be a flat deductible. And as an example, in the UK, another imperfection in the UK system, at least some years ago, the deductible was at £50, which is about 100 Canadian dollars roughly. So, and this was flat to everybody. First, this deductible was too low because £100 does not really encourage people to do or to take preventive action in case of an event, or also before an event to change something at the construction, or just to make windows and doors impermeable. These things you do not implement if your deductible is only at 100 US or Canadian dollars. Then what is also important, as I mentioned, it should be in percentage of the sum insured. And there it could be something like 0.5% or 1%, and this also could be driven by the flood exposure. And here we have another very good measure to keep flood insurable or affordable, actually flood insurance affordable in high-risk areas, because high-risk areas would ask for a high-risk premium, but if you put a high deductible, this would reduce the risk premium substantially. So people could still afford to buy flood insurance in high-risk areas, and they would have a cover for the real downside, so for the extreme losses. But for the many small losses, the $5,000, $10,000, $50,000 losses, for those maybe they would not get indemnification. But in case they have a total loss, then the flood insurance coverage would work. So with a deductible, you could keep also premiums low in high-risk areas. And percentage deductibles, because someone who owns a $100,000 home with a 1% deductible is different than someone who has a $1 million home. So therefore, just to make it also fair, a percentage deductible works much better than just a flat deductible of, let's say, $1,000 or $2,000. Paul, I don't know whether you have spotted another question. If not, then I have here also an interesting question from a Swiss resident from the UK, and he says the Swiss system is well supported and understood by the population. As part of the education system, introduces, or in school, it's already introduced about flood risk, or in general about natural catastrophes. And do you think that perhaps for Canada this understanding of flood as a peril could similarly be introduced at school levels? I think that's a very important question, and that goes back to one of the slides presented, that all stakeholders should assume their responsibilities. And on the government part, they also have to assume their responsibilities, and one of the most important responsibilities of the government is to create awareness about the flood risk and also introduce then measures to reduce flood risk in areas where it is very high. But I think it's very helpful if we already start in schools to train people or to educate people, to make them aware about the risks, different types of risks. This would be very helpful. And here I see the government, but also maybe the insurance industry have some responsibility to make people more aware about the risk, but also then about the solutions that insurance could provide.
Jens, this is Paul. I have another question here, if I can switch to that. And just a quick announcement as well. There is a survey tool that's going to be available just when we end the webinar. And if people participating would take a moment to answer the survey, that'll just help us in terms of making sure we're giving you information that's useful and such. So if you can watch for the survey at the end. The question's a little bit long, but in part, if I can just hopefully summarize a key part here. The question is related to the fact that in some parts of Canada, flood is seen in a way that if someone's located in the floodplain, they're clearly at risk, and it's unclear whether insurance has a role. And if someone's outside the floodplain, they believe that there's not a real risk. The government's telling them that, and maybe they don't need insurance. Is that a sense of how we were thinking about bringing in flood insurance, that sort of view of the world, and how we would deal with that? Part of what Jens shared in the presentation is that there's many models around the world. For many respects, the model, if we were to choose one that we thought was likely to be the most successful in the Canadian market, we thought there were many characteristics of what's happening in the United Kingdom that could work in Canada. In the United Kingdom, the commitment of the government is that there is not to be new development in the floodplain, and they've identified what the government believes is a very high-risk area. In this case, it's the 1 in 75-year flooding that the government's targeted, and that the government is responsible and will try hard to limit development in those zones of high risk, or stop development in new development in those zones. And the insurance industry does not promise to provide people who got into those zones that they necessarily will or will not make insurance available for people in the floodplain. But the commitment from the insurance industry is everybody who's outside the floodplain, we guarantee that they're insured. If you buy fire and theft coverage, part of that coverage is to also include flood coverage for everybody who's not in the government-identified floodplain. That concept has been accepted in the United Kingdom. If we were putting in a system here in Canada, again, the question comes up, how do you use insurance for properties at really, really high risk? So one of the ways that the insurance industry might choose to manage that and dialogue with governments about that can be to take that kind of concept that there is a societal decision, a political decision, this is high risk. And in different parts of Canada right now, in terms of mapping and whatever, the definition might be the 200-year floodplain or the 100-year floodplain or whatever it is. But the government decides, here's what high risk means, and that's a political decision. And it's very much a public policy challenge. If the government let people get into those areas with their homes and their businesses, or if the government in the future considers allowing people in those areas, that's a policy decision that is under the control of government. And for insurance companies to say they're very uncomfortable with those properties is, I think, a natural thing for an insurance company. But for the insurance industry to step up and say, if a property is outside of the government-identified flood zone, why aren't we providing insurance? The risk is low by, if the maps are good and the decision is solid, why don't we step up? And again, the cost of insurance should not be very high for anybody who's not in the highest risk zones. It should be measurable. It should be something that we believe technically can be covered by insurance and perhaps covered comfortably by insurance. And we certainly would be taking a concern that many Canadians are worried that they have seen flood and may have experienced it, and to say to most Canadians, because most Canadians are not in the floodplain, that insurance could be a new coverage that comes in would likely be a welcome change in where we're going. So anyway, part of using the UK as a model for what a Canadian discussion would be would very much take, as the question laid out, this concept of there is a public decision what is high risk and what is not, and see those areas of high risk are very much a public policy issue, not necessarily an insurance issue. But if you're in an area that's not seen as high risk, to have an insurance solution is something that our industry has done in so many other areas. It looks feasible that we could do it for flood insurance for people outside of the floodplain. So I hope that answers that question.
I would have another one which maybe goes in a similar direction and builds up then a bit further. I think we have spoken a lot about high flood risk. How do we differentiate between high and low flood risk? And the question would go in, or probably what we need to differentiate between high and low flood risk is the proper risk zoning information, so risk maps. And the question here is, in other parts of the world, does the private sector take responsibility for mapping? And if so, how is it paid for? And here again, from experience, what we see in other countries, as I mentioned in the presentation, Germany, there the Insurance Association, they jointly developed a flood risk map for Germany, and they all players use it. So they also the payment or the cost of these maps were jointly shared between the players in the market. A slightly different approach is pursued in the UK, where the larger companies, so far at least, they do their own projects and they invest quite some money. There's one big player that invested millions of pounds to get a very precise, very detailed flood risk map in the UK. There are other players who do not invest that much. Probably the best solution is if the insurance sector jointly develops a risk map, but the even better solution would be if the government, which from my point of view is also in its responsibility, would develop a flood risk map for its country, or at least for those highly populated areas. And there are also examples where governments have issued flood risk mappings. Actually, in the UK, there is also a governmental risk map available, which many players are using.
Jens, this is Paul. I have another question here, if I can switch to a different one. And if I can put in a little plug for the Institute, we are hosting a webinar tomorrow on flood mapping. And it's free if anybody would like to learn about that one. Just go to the ICLR website. And this is to talk about mapping and the potential in Canada. Anyway, the question is, when we've been talking about insuring flood for homeowners in Canada, what definition of flood are we using? What do we mean by flood? That's something that's covered in detail in the research paper that we released. It's actually a complicated question, and I don't want to go on at length today. I do want to share that our review of programs around the world made it very clear that there are meaningful differences in terms of what perils are covered and not covered in different parts of the world. And from a homeowner's point of view, that is very challenging, where, to use Canadian examples, insurance is available for sewer backup coverage, and the kind of water damage coverages that are available in Quebec are a little bit more inclusive than they are in English Canada. But riverine flooding is not covered anywhere in this country right now. In some countries, they cover flooding when a river overflows the banks, but doesn't cover storm surges or coastal flooding. I think that's the case in Germany. Anyway, flood insurance does differ around the world. It's our encouragement that we believe in technical terms all aspects are indeed insurable. It is possible to cover the broadest range of different flood risks, and if the objective of the exercise is to be as friendly to the homeowner as possible, then the definition of flood we would encourage would be sewer backup risk, urban flooding risk, riverine risk, coastal flooding risk, tsunami risk, to include all of that as part of what the homeowner is possibly concerned about would be a most friendly program as possible. And a last comment on this, again, I would encourage anybody who's interested to look at that Australian Natural Disaster Insurance Review. A big part of that dialogue was to say that it was frustrating in Australia to have the industry approach flooding in Australia in a different way than it was approaching wildfire and cyclonic risks. And there was a real push by the review team to say being more inclusive and to cover all aspects would have been much more welcome by homeowners. So the answer to the question, what flood risks are we talking about? We would share that there are important differences around the world. We believe, Swiss Re and ICLR believe, that if the industry steps up and covers as comprehensive a list as possible, that will be the most helpful for homeowners. And we believe that it's technically possible to do.
Okay, yeah, thank you, Paul. I think we can take this as a final statement. I would like to thank everybody participating in this call. I thank everybody for the excellent questions that you have handed in. And just at the very end, I would like to encourage you to go through the survey. You have a tab on your system which will lead you or which will guide you through the survey. And with that, I would like to close the call and hand over to the operator.
Thank you, ladies and gentlemen. This concludes today's conference. Thank you for participating. You may now disconnect.